Look at the camera. You see it? You see it? What's up, guys? Welcome back to my channel. My name is Ashley May, and today's video is on how to raise your credit score. We're going to talk about how I raised my credit score from a 688 to a 751 at the age of 23. If you guys like this video, make sure to give it a thumbs up, subscribe, and comment in the comment section below what you enjoyed about this video or what questions or tips you have for those who are looking to increase their financial literacy. I am not a financial advisor. I am just giving you guys tips from my own experience with raising my credit and making sure I have good credit, and I hope it helps you on your credit journey and your financial literacy journey. Before we get into conversation about how exactly I raised my credit score, I first want to start this video off by talking about the 5 components that make up credit. Understanding the foundation of what a credit score is what's going to allow you to learn how to navigate these components better, and what will ultimately help you use them to your benefit to raise your credit score. A higher credit score, similar to any other higher monetary unit, is going to provide you access to some of the things that you would not typically have access to, such as being able to rent an apartment, being able to purchase a car, get a mortgage, a home loan, a personal loan. Making sure you're taking care of your credit is very, very crucial. Making sure you are protecting it, making sure you understand what credit is and how to increase it, what factors are affecting it, all very, very important things. There are 5 components that make up your credit score, and the component that ranks the highest is your payment history. Your payment history makes up 35% of your credit score, and ensuring that you're paying on time every time is going to really help raise your score and keep it at a higher number. If you don't pay your cards on time, you can run the risk of receiving derogatory marks on your account, which can then decrease your credit score. And these things come in the form of collections, tax liens, bankruptcies, or other statements that are on your credit report stating that you have not paid something or you have some kind of bad rep with a certain lender. So if you see these on your report and you know they're not true, that's why it's so important to monitor your credit score and to monitor your credit reports and to actually read them through thoroughly, to avoid fraud, to avoid identity theft of any sort, but also to make sure that you are protecting your credit and you are well informed about the things that are on it. You should not be putting things on your credit card or using credit for things that you can't afford. And that's how a lot of people get trapped into credit card debt. And I will tell you a little bit about that when I go into the story portion of how my credit score got 688 and, the raising it part. But don't use your credit for things that you would not have already been purchasing in the first place and things that you already didn't have the money for. Your credit card is not a form of extra money. It is not like an emergency fund. It is not an allowance for all the fun things that you want to do. Your credit card is there to help you build credit ultimately, and there are perks and rewards once you have facilitated a healthy relationship with your credit. But if you have a poor relationship with credit or with credit cards, then I would caution you against having them if you have not yet learned how to manage your finances on a basic. The next component of your credit score is going to be your credit utilization rate. This makes up 30% of your credit score, and it's basically the way of saying how much of your available credit are you using. So for example, if you have a credit card and your limit on that credit card is $2,000, then you are not going to want to typically use more than $600 of that credit card limit at a time, because then that would be 30% of your total limit available. To get into the part of this video that discusses how I raised my credit score from 688 to 751, let's first backtrack and talk about how it got to that point in the beginning. When I moved from my mother's house and moved here into this apartment, I had money saved up to move, and I had money for rent, for my phone bill, for food, for clothes. But for some reason, I forgot in the process of moving, very naively, that you have to buy furniture. So I wound up using that money for furniture, and for getting a bed and the TV stand and everything else that I have in the apartment. In the process of creating an emergency, simply by moving and not fully having a job secured. Like, I had gotten a part-time job when I moved here, but I did not have a full-time job at the time. In the process of doing so, I left myself without money, and that kind of kickstarted my own journey into financial literacy and making sure that I never put myself in that position again. I used my credit card at the time. My first credit card that I had opened, I opened that in 2016, and I used that credit card at the time, which is not that great of a card, but I used that card to cover the costs that I needed to cover while I was in between that stage of getting a new job. And once I got that new job, I then got right on to fixing up any credit that had gotten damaged in the process of like putting things on my card and not fully being able to afford paying them off in full. The negative of doing this is that I wound up paying really high interest rates on this credit card because I was using it. And typically with store credit cards, which is what that card was and is, because I still have it open, there's typically high interest rates that range from about 14 to 15%. I think 14.99% is the current lowest interest rate, and it ranges up to about 26 to 28%. But my card was at a 22% interest rate, so anything that I wasn't paying off from the month that I used it, that was then being carried over to the next month, I was then being charged 22% interest on that. And that is ridiculously high, and it's also ridiculously poor on my part to not have understood that, which then led me into this journey of being able to produce this video for you guys, so you don't make the same mistakes that I did. I paid that card down by doing a balance transfer from another credit card that I opened once I had built my credit score up enough from paying it off with my new full-time job. I used that new card to pay off the old card, and then by doing the balance transfer, I had a promo offer of a 0% interest rate, which allowed me to pay off that amount from that old card and pay no interest. Now, this can be risky if you don't have a great relationship with credit, and it did take me some time to figure out not like abusing my credit card. And I didn't do it in a severe, to a severe amount, but I did, like, okay, I would buy like some food every now and then, or okay, I wanted like a shirt.
And then I had to stop myself and say, what are you doing? Like, stop spending money that you don't have. So,
as I was saying, when I did have my initial credit card and I did overuse that card, I increased my utilization rate, which I've mentioned previously, and by increasing my utilization rate, I decreased my credit score. I had a very high utilization rate on my credit report, and so it was well over 30%, which is not at all recommended. So you're going to want to keep your utilization rate very low. Try to keep it in that 30% range. Again, going for 10% is even better.
If you can't afford it, just don't put it on credit, because it's just not an extra way of having money. It's not a backup. If you can't pay it off in full at the end of the statement period, then just don't do it. Just don't do it. Just don't even get into the cycle of credit card debt.
The third component of your credit score is going to be the length of your credit history, and this makes up 15% of your overall credit score. Not only did moving my card to another card to pay it off through the balance transfer and having a 0% interest rate, not only did that help raise my credit score, but I was also able to raise my credit score by having a new line of credit open, and therefore having a higher credit limit, which increased my credit utilization ratio. Even though this decreased my length of credit because I had a newer line of credit open and it averaged out to be lower, it increased my credit utilization ratio from, I think, $4,000 to $13,000 available, and so that really did help me out in raising my credit score. Unless you absolutely cannot have the card any longer, try to just keep your cards open, put something small on it like your monthly Netflix subscription or something, and then pay it off immediately with your with your cash as you normally would. That way you can keep that card open, maintain that length of credit history, and continue to increase your score. The next component that's going to contribute to your credit score is going to be new credit, and this typically is 10% of your credit score. This includes things such as hard inquiries on your credit score. A hard inquiry is when a creditor will pull your credit report to see if you are a trustworthy person to lend to or to do business with, and this will normally like affect your credit. You don't want to have too many hard inquiries on your account at a time. Typically keeping them under 3 hard inquiries at a time is what's a good rule of thumb. A hard inquiry can stay on your credit report for up to 2 years, so you're going to want to make sure you're not applying for too many lines of credit at any one time. And a hard inquiry differs from a soft inquiry, where a company can equally check your credit and run your credit, but it won't have an effect on your credit score. A soft inquiry, and I'll be sure to include the definitions of each in the description box. A soft inquiry does not affect your credit score, whereas a hard inquiry does affect your credit score. The last component that's going to make up your credit score is going to be what lines of credit you have open, and that's going to make up 10% of your score, such as if you have student loans, mortgages, private loans, if you have like different kinds of credit cards, whether you have store credit cards, whatever you have available, it's going to make up that component of your score and like what mix of lines of credit you have. The more lines of credit that you have, the more you're typically seen as being a trustworthy borrower, and therefore it's also good to have a variation of different kinds of credit lines open. So if you have only student loans, then it might be a little difficult for you to get a credit card, but if you have a credit card and a student loan and a car loan and a mortgage, you're open to being able to get different kinds of credit because you have it demonstrated that you can be a trustworthy borrower. So now that you guys know a little bit about me and you have a little bit more information on what makes up your credit score, I just wanted to answer one of the questions that I received on Instagram when I did a poll about what are your questions regarding credit and financial literacy or whatever. And the question that I received is, I don't want a credit card, but I want to raise my credit. Now what? So there are other resources that you can use to raise your credit. I will link those also in the description box. But one of the best ways to raise your credit score is honestly to get a credit card. And I know that sounds annoying to even say. Having loans and having student loans can help you raise your credit score when you like pay those down. But you run the risk of paying your student loans off and then losing that line of credit and then decreasing your score. But if you don't want to get a credit card where it is provided to you by a borrower, there are many secured cards that you can open. If you just like search up different secured cards through whatever bank you bank with, they might have a secured credit cards available. And what you do is you deposit a certain amount of cash, like from your debit account. You deposit a certain amount of your money, and then that helps you slowly build up your credit card. Slowly build up your credit score without using money that's coming directly from someone like Discover or Chase or whoever it is that you bank with. Another great way to increase your credit score is to become an authorized user on someone else's card who already has a higher credit score. They can make you an authorized user. For example, I could become an authorized user on someone like my mother's account, or I could make someone in my family an authorized user on my account, and then that will help them raise their credit score by making the payments and making them on time, but my credit is like the initial and then theirs is like underneath. So you do run the risk, however, though, with if you are an authorized user on someone's account, or if someone's an authorized user on yours, the risk is that that person is then basically vouching and saying that you are then vouching for that person, or someone is vouching for you and saying that those payments will be made on time. So make sure you're doing this with someone who's very trustworthy, absolutely trustworthy. If at all, I would just say just avoid it and just try to build your credit on your own terms and on your own time, as opposed to partnering with someone else to do this. Ultimately, your credit score is really just a way for a lender to be able to see that you are a trustworthy borrower and that they want to do business with you. Keeping this number up is what has helped me get this apartment that I live in. It's also helped me get other lines of credit and, get my student loans. And it's really just a huge part of stepping into adulthood and understanding how to really be financially responsible. So those are my tips on how to increase your credit score. I hope that this video has been helpful for you guys. If you want to hear more about financial literacy on my channel, please let me know down in the comment sections and just tell me what you want to see. I'll be glad to do some research and to present it to you all. I'm doing a future video on how to create a healthy emergency fund and how I've created an emergency fund for myself. So just let me know what you guys think about this video. Don't forget to give it a like and subscribe to the channel for future episodes and to share with a friend. Until next time, guys, peace. Do you love me? Do you love me? Do you love me? He loves me.